And so I'm feeling incredibly optimistic that more and more money will flow into Bitcoin Treasury companies. I love seeing how many new Bitcoin Treasury companies are popping up in every corner of the globe.
Yeah.
It's absolutely great for the industry. And it's great because finally there are companies that are able to provide access to individuals that in the past could not get access easily. But more importantly, institutional capital, which is where all the capital is. They haven't been able to play the Bitcoin story. They haven't been able to get exposure to Bitcoin, and finally, there is a mechanism for them to do so, and that is the Bitcoin Treasury Company.
How are institutional investors thinking about the Bitcoin Treasury space?
Now, the difference in Japan is it's an absolutely yield-starved country. Interest rates are incredibly low. The other prefs out there, SoftBank, I think, is 2.5% coupon. And there's just incredible amounts of capital all around the world that's looking for, I think, exposure to Bitcoin.
Yeah.
And it's up to companies like Strategy, like Metaplanet, other Bitcoin Treasury companies to identify those pools of capital and offer them what they're looking for.
Yeah.
The equity side is really easy as a first step, but then realizing that there are pools of capital that have different risk-return objectives, and to offer them and design them something which meets those requirements, I think is the tremendous unlock.
I'm extremely happy today to introduce a new subseries of the Seize the Future podcast focused on Bitcoin Treasury Companies, or BTCTCs. This topic is so extremely hot and often entirely misunderstood that I thought it merited deeper exploration. 2 months ago, Simon Gerovich, CEO of Metaplanet, joined me to discuss what he'd done with his company. The video is extremely popular, and there were many more questions that have come back from our listeners across the world. So I thought, what better way to kick off the BTCTC subseries than with a part 2 with the man who transformed a $10 million failing Japanese hotel business into a $7 billion giant built on the future of capital in just a matter of 15 months. Simon joins us today to answer many of your questions, as well as some of the more technical aspects that we were unable to cover last time. Please enjoy. Simon, welcome back to Switzerland. It's really great to have you here.
Thank you very much. It's exciting to be here. I really enjoyed our last podcast together and looking forward to the one today.
Yeah, I think people really appreciated it. I think it was good to have a proper understanding of many of the aspects of Metaplanet. And I think there are many more that we didn't get an opportunity to explore. So I think it's really opportune to have you here for a part 2.
Absolutely.
Good. Well, look, one of the things you've announced recently is this absolutely massive capital raise, the 555 plan. Obviously, there's an element of numerology there. I think 555 means go, go, go in Japanese. And actually, all your capital raises, you tend to have some fun with the numbers around them. And maybe just explain where the 555 came from. And just for everybody to know, that's 5.4 billion. You're currently a 7-ish billion
That's right.
market cap. I'm assuming you've dug into some of that 555 already. Maybe just talk us through kind of where the number came from, where we are so far, and in line with your plan for the end of the year.
Sure, absolutely. So the 555, as you correctly noted, is go, go, go in Japanese, which is a bit of a rallying cry. It also happened to be the rights issue price of our rights issue last summer. And that was an incredibly successful capital raise. We had almost 13,000 individual shareholders participate, filled out 10 pages of subscription documents and sent money directly to the company so that we could buy Bitcoin. And so for us, we think of that as a milestone for us, a very important time that we onboarded fans of Metaplanet in a way that wouldn't have been possible if they had just bought shares in the market. 555 was also, very deliberate. It's roughly a 90% dilution or so. So we wanted to roughly double our share count. We want to become the second largest holder of Bitcoin in the world, and that would give us roughly enough money to get to that point. Numerology-wise, Japanese absolutely love the numerology. I'm excited that the rest of the world seems to enjoy it as well. So we do our best to choose a number which resonates well. And 555 has now become that number in Japan that people really, really like. So we'll do our best to have 555 included in as many of our future disclosures as possible.
Nice. Good stuff. I think one of the things that we didn't cover off properly was the way that you've very cleverly replicated the ATM that Sailor can do in the US. This is a dynamic that obviously any BTCTC needs to understand, Bitcoin Treasury Company, needs to be able to have a mechanism like this to be able to issue shares into the market to sort of keep that mNAV in line with where the Bitcoin holdings are. So maybe can you just explain the moving strike warrants that you've been using, how it all comes together with Evo, and you've iterated it recently as well to the benefit, obviously, of yourselves and the shareholders. So maybe just talk about that and the structure itself.
Sure, of course. And so the benefit of American companies, and I imagine companies in Europe as well, is they have the ability to issue shares at the money. The at the money equity offering is incredibly popular in the US, and it's a great way for companies to raise money kind of at the market price along with volume. And so Strategy and others, they work with brokers. They can sell new shares into the market every day. But that's not something that we can do in Japan. And when we researched that last year to see what we could do as a way to efficiently raise capital, we realized that wasn't possible. So we looked at the various forms of capital raising, which are popular in Japan. And the moving strike warrant is something that small and medium cap companies have generally employed as a way to raise capital. Generally, it's used for companies that are in a bad state. And so they'll go to a traditional broker. The broker will say, I'm taking risk here. I want to buy shares at a 8 to 10% discount. And so generally deals in moving strike warrants are very dilutive. They're not good for shareholders, and the discounts are massive, 8 to 10%. We thought there was an opportunity to use the structure, but do so in a shareholder-friendly manner. And so we have now done 3 moving strike warrants. Our first one was a small one in December last year. We raised about $65-70 million over the course of 5 trading days. And so that was great. It showed us that there is demand and volume and liquidity for us to be able to do so efficiently. We then, at the beginning of this year, announced our 210 million plan. It was the 21 million plan, but after the stock split, it became the 210 million plan. That we raised almost $700 million over 60 trading days. Again, testament to the amount of volume, interest, and liquidity that the stock has that can easily absorb that amount of capital raising. And then finally, we now are in our current plan, the 555 million plan, which is the largest single moving strike warrant transaction in Japanese capital market history. And it's also done on the most shareholder-friendly basis. And so the one at the beginning of the year, the 21 million plan, was issued at a 0% discount. So again, put that in context with the 8 to 10% discount, which is normal in the market. This particular one, the largest ever issued in Japan, is now at a premium. And so there's 3 tranches. Tranche 1 is a 0% discount. The next tranche is a 1% premium, and the last tranche is a 2% premium. So on average, we're going to be selling shares at a 1% premium, to the reference price. And that's us being able to retain a lot of value for ourselves and for shareholders, which makes a big difference. And so that's, I think, an exciting, unique way for us to raise capital efficiently in Japan using a tried and tested fundraising method.
Yeah, I don't know if we mentioned it on the last podcast, but we used to call these death spiral warrants or death spiral CBs because they were often done as CB structures as well, convertible bonds. And as you say, they were absolutely for desperate companies that had no other way of raising capital. And so their stock price would get absolutely hammered because people would sell into the close and then basically manage to buy them back at that price.
I think the important distinction with those is that there's typically no floor. And so as the company raises capital and the financing partner is selling shares, it has this death spiral.
Yeah.
In the case of our warrants, there is the ability also for us to pause. And so, we're able to look at mNAV, we're able to look at our liquidity and the volumes and the share price, and also make an assessment about whether or not our financing partner, in this case Evo, exercises more quickly or exercises more slowly. So we have that flexibility to ensure that we can guide the market towards a reasonable mNAV.
Yeah, and I think we should probably just also highlight that a little bit, is how Evo operates, because I've known Mike Lurch for many years as well, and I think he's someone that really understands partnership.
Mm-hmm.
And I think that's probably why you've chosen uniquely them, because that allows you to have some oversight in terms of what he's doing, and you've not got some spivvy hedge fund destroying your stock and mucking around with the share price. You've got Evo, who you too, I'm sure, know Mike as long as I have, because he's been so active in Japan since even I think the 90s. He set up his first hedge fund.
We've had a long-lasting relationship with Michael Lurch and with Evo Fund. Even as the company, we did a financing transaction with Evo Fund back in 2019. We raised, I think at that time, about 500 million yen, so call that $3.5 million, which at that time was a lot of money for us, but now pales in comparison to the size of the transactions that we do now. But it's been a result of a long-lasting, trust-built relationship. And this is the third moving strike warrant that we've done, and the first two were executed impeccably. And so I have great confidence that the 555 plan will execute smoothly over the coming months. And we've now executed roughly, I think, 14% of the plan. That's raised us about $700 million. And so the pace of our ability to raise capital is really accelerating.
That's fantastic. Okay, I didn't realize you were already that far into it. Yeah. Good. Okay. Well, look, I think the other thing that I even struggled to understand was the link between what you're doing on the fixed income side with Evo and that zero coupon bond in relation to the moving strike. So my assumption had been that was entirely utilized when you had this moment where you were waiting for approval from the JSDA and or JSFC and having to wait until you were allowed to issue more shares. But maybe just explain the various different reasons that you do these bonds.
Sure. And so generally, shares are exercised as part of the moving strike warrant when the share price is up. And those are the times when you're able to sell some shares, exercise, raise capital. But there are obviously also times when the share price is down. The stock is volatile, stocks go up, stocks go down. And we want to be able to consistently buy Bitcoin over time. And so the bonds that we issue are really to facilitate purchases of Bitcoin when the stock is on down days. And when the stock is on up days, Evo is able to exercise, and they can subscribe for those new shares with cash and also offset with bonds. And so I think last week there was an exercise, or 2 weeks ago, and it was partially subscribed to with cash and partially subscribed to with bonds. What's great is that these are zero coupon bonds with no collateral, no guarantees. Think of them really as an advance against future exercise. So I think of them more as quasi-equity than debt. But I think there's very few financing partners out there that are willing to extend zero interest loans. And that's the nature of this symbiotic relationship that we have with Evo.
And again, I would just point people to that. It's very unique, that partnership that you have with Evo. It's one of trust, but it's also of mutual benefit. I think that always is the best thing in partnership, when it's win-win, right? So that's great.
And also great for the company, great for shareholders, has really enabled us to accelerate our Bitcoin purchases.
Yeah.
And so it's something that I think we always want to have bubbling in the background. So always have a moving strike warrant in the same way that Strategy has the ATM facility, which they can call on from time to time, depending on market conditions. But it will be a significant source of capital raising for us over time.
Fantastic. So look, one of the things that I've always said that I love about Metaplanet is your derivative background and you using the put underwriting strategy. For those viewers who don't really understand what that is, could you just really break it down in a very basic way, what you're doing and how you're doing it, and what even is a put, right?
Right, sure. There certainly are some common misconceptions. Some people think that what we're doing is hedging, and it couldn't be further from the truth. We are incredibly bullish Bitcoin, and what we do is effectively selling put options, and selling a put option is an obligation to buy Bitcoin at some point in the future. It's a bullish position. One must buy Bitcoin if the price falls below the exercise price. And so for us, we think of this as a way to capitalize.
Maybe, sorry, just stop that. I'll stop you just to say, look,
Sure.
could you just give an even more basic explanation of what a put option is for the viewer that really doesn't quite get it yet? And so how you're using that function to generate premium.
Sure. So a buyer of a put option typically does that as a way to hedge. It's sort of an insurance policy. So if they own a basket of stocks and they buy a put option, that gives them protection below the exercise price. That's the more understood way that a put option is used. In our case, we sell a put option, and people are bidding up for these put options because they want protection. We're using it as a way to affect a bullish view. And so Bitcoin implied volatility is a certain level that enables us, when we sell a put option, to earn premium. It's premium that we can book as revenue and retain on on the balance sheet. And when Bitcoin falls, we're obligated to buy the Bitcoin. When Bitcoin goes up, then we get to keep the premium that we've earned from selling it. And so for us, we look at this as a way to generate stable income. We look at it as a way to affect a bullish view. I think some criticism has been, if you have cash and you don't buy Bitcoin, you're selling a put option. Is that not being kind of max bullish? The reality is, when you sell a put option, you're taking on the delta worth of exposure, and you're getting longer and longer as if Bitcoin were to fall. But most importantly, it's to generate a stable source of revenue. And our approach is that the majority of the money that we raise goes productively into buying Bitcoin, but a portion of it, up to 5%, we put aside for our Bitcoin income generation strategy. That's projected to make us this year $20 to $25 million. Our operating costs are really low, which basically means that we're very profitable with just a small portion of our capital allocated to the Bitcoin income generation strategy. And so I would say it's a bullish view. We love Bitcoin and we're long Bitcoin, but this is a way that we can get paid to buy Bitcoin.
But you're collateralizing it with cash, right? And so obviously, if you were to be max bullish, you could potentially collateralize it with the pristine collateral that you have on your balance sheet. And with that functionality that we just discussed, with Evo providing you lending facility should you need it, why not just do it with Bitcoin as the collateral? Why not just say, okay, we're going to take a portion of the Bitcoin, we're going to use that as collateral, we're going to underwrite puts with it, and then take the premium in Bitcoin as well, because I think you take it in dollars or yen. And then that way, if you ever do have to buy the Bitcoin and you're not able to do the ATM structure and the moving strike, then you could just borrow from Evo at that zero rate. So maybe just
Sure.
talk about how we step it up a bit in terms of aggression.
There's various levels of risk that one can take. I think our approach until now is to be as risk averse as possible. As far as encumbering our balance sheet is concerned, we really want to have a pristine balance sheet of Bitcoin and not touch that, not encumber that, not borrow against it. And everything we do is at the balance sheet level. We issue equity securities. I'm hopeful in the future we issue fixed income securities. But the chance of being able to do that effectively is a function of how pristine your balance sheet is. I worry about borrowing against our Bitcoin, encumbering our Bitcoin, because that just means that during inevitable down cycles, you want to be able to say, well, we're completely safe. We don't have to sell our Bitcoin. And so that's sort of the approach. But I hear you. Is there a way to optimize the strategy a bit more? We do have financing capability through Evo, through the straight bonds. I think in time we can negotiate trade finance agreements with various partners that we have that can provide us with short-term capital. And so maybe we could sell more puts. And then if the market falls and we have to purchase that Bitcoin, then we can source that capital from somewhere. There's always a way to optimize, obviously, to the nth
Yeah.
degree. But I think the overriding consideration is, wanting to ensure that our pristine capital base of Bitcoin is unencumbered, and maybe do a bit more of the fancy stuff at the balance sheet level through the issuance of securities that are backed by the pristine capital.
Okay, just talking about optimization within that strategy as well. Obviously, you've been playing with it now for how long have you been doing the put underwriting?
From November, December last year.
Okay, so yeah, what is that? 8 months or so. So yeah, you've been running put underwriting for 8 months. I guess you've optimized to the strikes and tenors. Where are you finding the most juice at this particular point in time for your put underwriting?
Well, without wanting to reveal too much alpha, because I think our competitors may be keen to employ a similar strategy. But we think of every time we raise capital, we have two options. Obviously, the majority goes to just buying Bitcoin at spot price. I'm often asked, do we wait to purchase? Do we hold our cash to purchase in the future? Absolutely not. We purchase Bitcoin as quickly as we possibly can. And we don't want to carry a cash balance that is too significant. So I would say that the put options that we sell are effectively at the money. And that's the same as just buying Bitcoin. So it's no more risky than buying Bitcoin, because you're selling an at the money option, but you're being paid significant premium, being paid to buy Bitcoin. We've been experimenting a bit with maturities. Selling 12 one-week options, you can make more revenue than selling one 12-week option. And so experimenting a bit with the maturities is something that we're looking at to maximize the amount of premium that we can earn.
Yeah. Okay. And I guess, the market changes. We've obviously just seen a quick up and down in Bitcoin price. And so that will increase volatility and potentially change the view of term structure or skew that makes most sense. So yeah, when we think about the strikes that you're selling at, it's at the money, or is it often slightly in the money? How are you doing that?
So typically the strikes are $1,000 increments. And so we choose the strike which is closest to at the money. So sometimes it's slightly in the money because the closest strike is slightly in the money. But generally the approach is sell something that is at the money.
Okay. Perfect. Nice. I think you guys are unique. I don't think anybody is doing this. I mean, you jokingly said that maybe some people would look to replicate the strategy in it. But I think that, the majority of CEOs in this space are not derivative people. And so that just gives them a caution.
It definitely feels like second nature. I like to think back at the most exciting career that I had, which was really at Goldman Sachs when I started. And then since then, I went on this detour, became a real estate developer that, for better or for worse, I sometimes feel rather regretful that I went down that path. But, the difficult times, I think, brought us to this point. And if it wasn't for the difficulty for our hotel business, we wouldn't have the public company today that we were able to pivot. But I do think back fondly to my derivatives trading days. And so now being able to take that knowledge and apply it to Bitcoin and apply it to a revenue generating strategy for Metaplanet, I think is very rewarding, and I'm very happy for it.
Yeah, it's nice how life comes full circle and
Absolutely
helps you utilize all of those previous skills. So I think the question on everybody's mind is prefs. I think obviously, Saylor intimated, I think in Prague, that he's not going to be able to get to Japan's pref market as quickly as he'd like. He's been extremely effective in breaking into various different types of capital pools that look at prefs. Maybe you could just give us a little bit of a viewpoint of the Japanese pref market versus US, but also the hunger for yield that there is in Japan, and where you think that maybe a coupon rate would be achievable in a pref in Japan.
Sure. Well, first off, the exciting thing about Michael Saylor and what he's done in the US is he's really managed to prove now to the world that there is demand for different types of fixed income instruments. The fact that a company that's backed by Bitcoin is able to compete in the fixed income market, transform the fixed income market, is truly special and exceptional. Obviously, it is inspiring us in Japan to look at the market there to see if there's a similar opportunity. In terms of timing, it's important that we have a larger, bigger balance sheet of pristine capital. And now we have approximately $2 billion of Bitcoin. And so to want to issue a significant sized, preference equity, we would, I think, need to have some more Bitcoin. And we're working really hard now to grow our Bitcoin reserves. The Japanese preferred equity market is basically non-existent. There are 4 listed Pref issuances right now. 2 are issued by SoftBank. I think the total size is something like $3 billion. And when you compare that to the Pref market in the US I think is something like 120 or 130 billion. Now, the difference in Japan is it's an absolutely yield-starved country. Interest rates are incredibly low. The other Prefs out there, SoftBank, I think, is 2.5% coupon. And Japanese investors, I think, would die to have a structure that can earn them a yield which is more attractive than what they're getting in the bank now. In Japan, I think there's still $8 trillion plus of household savings. This is cash sitting in personal bank accounts, earning nothing. The Japanese have encouraged now through their NISA program, the Nippon Investment Savings Account, for people to move assets from savings into investment. We've been lucky to be a prime beneficiary of a lot of investment in individual NISA accounts. People have bought Metaplanet in a tax-efficient manner through their NISA accounts. But I think there's a whole universe of Japanese investors who would like Bitcoin exposure, but they don't want the ups and downs of an equity investment. And so if there was a way to purchase a fixed income security issued by a company backed by Bitcoin that generates a decent yield, I think that would be incredibly interesting and exciting for them. And so on your question about coupon, I think, in the US, if strategy is issuing at kind of 8 to 10% coupon level, in Japan, it would be 3.5%, 4%, maybe 5%, but certainly no higher than that.
Yeah, I think obviously the JGB market has moved probably since SoftBank issued that 2.5% coupon. So I think, you probably have to be a higher level. And I think you're right, maybe 4, 5 makes sense.
This may be a controversial statement, but I think that Metaplanet's credit is better than SoftBank's credit. We have $2 billion of pristine capital, unencumbered, whereas a lot of other companies that may have a longer track record have confusing balance sheets. They have lots of assets which may or may not be able to be valued fairly. They rely very heavily on traditional financial models and cash flow and requirements for profit and paying large numbers of people. Our balance sheet's very simple to understand. It's not confusing at all. It's one asset, it's Bitcoin. And I can't think of anything better than that to be on one's balance sheet.
Yeah, to your point, I don't think there is a more confusing balance sheet in the world than SoftBank, probably.
Yeah. So if they can borrow at 2.5%, then maybe we can borrow at a level that's not too far from that.
Yeah, I mean, definitely. I think obviously the rate environment has moved in Japan recently as people have become a little bit more concerned. The question I also wanted to ask you about was the US. So you've recently incorporated in Miami. I'd love to understand what that's all about. So maybe you could just give us an explanation of why there, why Miami, and why the US.
Sure. Well, the US obviously is the world's largest and deepest capital market, and we want to be close, to the US and have a presence there. We also have a lot of people that would want to join us and work for Metaplanet. And so we're seeing a lot of inbound interest from US individuals that would like to work for Metaplanet. And as appealing as it is to move to Japan and as convincing as I try to be, I think, an ocean too far, for them. And so being in the US makes sense. We want to plug into the best liquidity for buying Bitcoin. And I think we've reached a bit of a limitation in Japan. So generally we have bought on local exchanges. But there's an interesting dynamic now that Japanese individuals, I believe, are trading less now on exchange because the more enjoyable way to get exposure to Bitcoin and trade on a daily, weekly, monthly basis is actually trading Metaplanet stock. And so our volumes have gone up, and the volumes on exchange have gone down, and we are feeling the impact of not being able to purchase as much Bitcoin on an exchange. And so wanting to plug into more liquidity, sign up with the best service providers in the US, it was imperative to have a US subsidiary. We looked across all 50 states. We did an analysis through our lawyers and tax advisors on the state that was the most friendly to digital assets. And the conclusion we came to was that it was Florida. And I had a lovely opportunity to meet with Mayor Suarez on my last trip after the Bitcoin conference in Vegas. And he's a wonderful gentleman, and he talked very convincingly about Miami as a home for us. And our plan is to set up an office there and to have a number of people work out of the office there and help us with our U.S. growth plans.
Lovely. As you know, my final question is normally about capital allocation, but since we've had you on the show so recently, and I'm pretty sure you're going to say Bitcoin all the way again, and I had another question for you, just because you've been in Switzerland visiting investors. I find it very interesting to understand how are institutional investors thinking about the Bitcoin treasury space. You've obviously got capital as your second largest shareholder. It feels like Metaplanet is already at the stage of institutional investors. Maybe give people an understanding a little bit how these institutions are thinking about, players in your space and what their limitations are to participate as well.
Sure. And so I've had the opportunity now to spend time in both Geneva and Zurich this week. And I have to say that I'm very pleasantly surprised. I have done capital raising, for our hotel business in the past, and I've been to Switzerland on multiple occasions, and it was always the most difficult place to raise capital. The impression is that Swiss institutions are incredibly conservative, not very forward-looking. And so I approached these meetings in a very reticent manner. I thought that they would just be information gathering sessions, and I'd have to spend a lot of time talking about what is Bitcoin. Now, to my surprise, everyone that I spoke to was familiar with Bitcoin. Many of the PMs themselves have owned Bitcoin for a long time in their personal capacity. And they recognize the fact that they're unable to invest directly in Bitcoin, and in many cases still can't invest even in a Bitcoin ETF. And so BlackRock's ETF is still off limits for them. What they can purchase are stocks. And again, pleasantly surprised, many of them had heard about Metaplanet already. And so our reputation now is extended far beyond the Japanese borders. And they said that we were uninvestable in the past. And what they look at as an institution is, ensuring that the stocks they invest in have significant liquidity and there's significant market cap. We tick both of those boxes now, finally. For many, it's sort of a $5 billion plus market cap, which is when kind of the doors open to them as an opportunity to look at companies. But more than the market cap, it's the liquidity. And so if you're a $5 billion market cap company that trades $5 million a day, $10 million a day, trades by appointment, that doesn't meet one of the very important requirements. And so the discussions were great. They were engaging. People knew what Bitcoin Treasury Companies were. It's become this topic of discussion, not just within the company, but at dinners and at meals that they have with each other and with their peers. And so I'm feeling incredibly optimistic that more and more money will flow into Bitcoin Treasury Companies. I love seeing how many new Bitcoin Treasury Companies are popping up in every corner of the globe. It's absolutely great for the industry. And it's great because finally there are companies that are able to provide access to individuals that in the past could not get access easily. But more importantly, institutional capital, which is where all the capital is. They haven't been able to play the Bitcoin story. They haven't been able to get exposure to Bitcoin. And finally, there is a mechanism for them to do so. And that is the Bitcoin Treasury Company.
Yeah, I always talk about the release valve of the money printing, right? The money printing has predominantly gone into financial markets and pushed valuations to ridiculous degrees in the equity markets, the bond markets, and even to some degree volatility. If you're a convertible bond guy, you're trying to trade volatility. Valuations just keep getting pushed higher and higher, and the vol just isn't there because every time there's a dip, they print more money. Same in the bond market where you've got yields really not representative of where debasement is.
Yes.
Because bond prices have been pushed higher and higher by the institutional capital flowing in. And I do see, what you are hopefully about to do with the Pref market, but what Saylor particularly has been doing. And then, of course, with the equity as well, allowing that release valve to just let capital percolate into this Bitcoin asset for the first time, as you say. So, yeah.
Yeah. I mean, there's just incredible amounts of capital all around the world that's looking for, I think, exposure to Bitcoin.
Yeah.
And it's up to companies like Strategy, like Metaplanet, other Bitcoin Treasury companies to identify those pools of capital and offer them what they're looking for.
Yeah.
The equity side is really easy, right, as a first step. But then realizing that there are pools of capital that have different risk return objectives and to offer them and design them something which meets those requirements, I think is the tremendous unlock.
One final question, because I remember we talked about it earlier, but I forgot to mention it already. So how do these institutions think about mNAV? Are they thinking about it? Because I think everybody struggles to think about mNAV and what it means. Is a low mNAV good or is a high mNAV bad? And how really should you think about it? And I always call it the multifaceted diamond of a Bitcoin Treasury company, because you can't just look at that. You need to understand the aggression as well. So how are these institutions thinking about mNAV?
There isn't one answer. Yeah. Everyone has a different view. Everyone has a different approach. I think some people are a lot more thoughtful. I think the most unthoughtful response is, how can you trade at a premium? Why should I buy a portfolio of assets that is worth 1 and pay 4 for it? And I think what's hit it for me is that those who think about Bitcoin Treasury companies as simply a portfolio of Bitcoin are missing the forest for the trees. Yeah. The important thing is looking at their ability to grow Bitcoin per share. And so there's lots of metrics like BTC yield, et cetera, which are just one measure to show how quickly a company may be growing. And generally you probably want to buy companies that are growing their BTC yield, BTC per share at a faster rate than those who are not. One institution said that their strategy will probably be buying all the companies with high mNAVs and shorting the ones with low mNAVs, which is a bit ironic because generally in traditional finance, you buy the undervalued companies and you sell the overvalued companies. But that was a very good point. Yeah. He noticed and recognized that the higher the mNAV, the more you're able to buy Bitcoin with minimal dilution. And I think that's a very, very important point. For us, our mNAV has really oscillated between sort of 3 times mNAV and 7 times mNAV over the past 14, 15 months. Yeah. There have been times where it's spiked higher than that, but generally it's traded within that range. And every time it gets to a kind of nearer 3 times mNAV, that's when I think people see relative value in Metaplanet versus others, given the pace of our acquisitions. And that's when we usually see a bit of a pop in the stock price. Obviously, there's nothing we can do to control our share price, but we are guiding the market that 3 to 6 mNAV is kind of our sweet spot. And if mNAV rises too much above kind of 7 times, then that's when we ought to be more aggressive and raise as much capital as we can. But if mNAV falls below 3, then that's when we take a step back and perhaps put less pressure on the stock. Strategy has the benefit of having now many gears, right? So when mNAV is lower, they can do more of their preference equity issuances.
I think last time you came on the show, we'd just hit the bottom of that channel, a sort of a 3.5 times mNAV, and we had a lovely run to almost 8 times mNAV, I think it was. So now we're back at that 3 times mNAV, maybe history repeats.
I think it's less to do with the 3 times mNAV and it's more to do with your wonderful podcast. So thank you for that.
Great. Simon, a pleasure always. Thanks for coming on.
Thank you very much. Thank you for having me. Look forward to the next one.
Definitely.